You might be feeling a little bit stressed that you won't have enough money for this month or next month to invest into your regular investments such as stocks or ETFs, whatever you choose to invest in. And let me tell you, that's actually really okay. And honestly, it's exactly what's happening to me right now. Now, if you've been watching any of the videos on my channel, I always preach about dollar cost averaging every single week, every single month. And I have been doing this continuously over time myself. Every single week, in fact, I've been buying my ETFs as well as some cryptocurrency. And I have been documenting and showing this very transparently inside all my various portfolios that I have, for example, in the active brokers, where you can really see the success and growth of my portfolio over time. If I go back for 1 year, for example, you can really see it almost doubled in value from 23,000 now at 54,000. So really nice to see it. And that's in one part due to continuous investments into my portfolio, but of course also growth of the investments themselves. Or for example, on Trading 212, we have another part of my portfolio over here. So it's really nice to see that growing over time. And it obviously, once again, comes due to regular additions into my portfolio, right? It just doesn't grow automatically. It does over time, but the more I contribute, the faster the growth will be as well. And while I'm a very frugal person in general, I don't like to spend on big brands and what have you, but on travel experiences and investments, I never count the money. The more, the better. And I always felt good to invest into your personal future. And that's the beauty of it, right? I'm a long-term investor, and I know the contributions I make today will be worth so much more in the future because of the compounding effect. We start in the beginning and make very small additions, but then over time, as you continue to invest, it starts compounding, and then the interest on the interest starts growing, and you will really start seeing the effect over time, right? So this is the amount of time you invest, the period, and that's the value of a portfolio, and you will start seeing exponential growth. And exponential growth is different to straight line growth. Straight line growth is much slower. Exponential growth will be significantly faster. So that's the whole point of investing continuously over the long term, to see that compounding taking place. However, we're all humans and life happens, right? And the same just happened to me. Honestly, right now, I've been having so many expenses. Not only have I just left my corporate career, which had paid me previously a regular income, which I always appreciated, of course, and it was a nice income. I'm now building up my own business and my own income streams. And with every month, I'm getting closer to my previous income. So that's great to see. But at the same time, my expenses are through the roof, honestly. I mean, just to give you a bit of personal perspective, right now, together with my wife, we bought an apartment in Vilnius, Lithuania, which is a beautiful place. And yeah, we thought about keeping it or not, but in the end decided to actually keep it, even though we might spend not the entire year there, but parts of the year for sure. We just fell in love with it. I think we got a good price for it. But now you have to not only pay off the mortgage, but also you have to pay all the furniture, the finishing, the works. I mean, that's a lot of money to finish it off. But I think long term, again, it's an investment. In a way, it's just another investment, right? Instead of investing into ETFs, it's going to be investing into real estate. In addition to some of the apartments I already have here in Dubai, there'll be nice diversification of different real estate in a different part of the world. And we've already seen, the appreciation and value taking place. So the capital appreciation is already visible. And I think once we finish it off in a nice style, I think it will be even more nice in the future, and we can sell it eventually with a profit if we wanted to, or rent it out, what have you. Apart from that, right now we're based in Dubai as well, where I also registered my company. So here we're living more than 6 months of the year. And that way, of course, we also need the accommodation. Right now we're living in a beautiful place, the place you can see, but unfortunately they don't allow animals. And our beautiful little Nutella, of course, is part of the family. She will join us in Dubai very soon after the summer actually, and we need to find a place, and you don't want to be living in Airbnbs all the time. So I'm really happy about this actually today, signed our new apartment, which is a stunning place. I can't wait to show you around. That will probably come in the future after the summer once we really moved in there, because summer will be back in Europe. But yeah, amazing place. You're gonna love it. It's incredible. But yeah, the only thing here in Dubai, it's very common to pay an annual rent in one shot in advance. It's really unheard of in parts of Europe, but here it's very common. You can sometimes break it up into 2 checks or into 4 checks. They call it checks, but you can also do a bank transfer. But basically, you pay the entire rent in one go. And obviously, if you do that, you also get a better price. So that's good, right? We could have chopped it up into 4 payments, then you have less at once to pay. But that way, the overall rent might be more expensive. So that helped us to kind of get a better deal, because in general, it is definitely expensive. And then you can imagine that payment of a whole year of rent, in addition to the apartment and finishing off in Vilnius, Lithuania, we're going to have to pay for a car over here very soon. And as well, as I said, I just started my business over here. So business registration, golden visa process, a lot of expenses, I can tell you. And yeah, it's extremely expensive. Luckily, and I've shown you this every single month before, I made a lot of interest from my cash reserves that I keep in different high yield saving accounts, and I always benefited from it. But at the same time, some people have been asking me, why don't you invest that money? And I agree. In a way, I could have gotten a higher return of potentially 8-9% in the stock market versus 4-5% in interest, which is still nice. But now I can actually deploy that cash for all those expenses, right? Because it have to be very liquid and I don't want to be subject to any market fluctuation. So I think it was a good strategy, but now I removed a lot of the cash and yeah, I'm very much strapped for cash. That's definitely the case right now. And of course, I could now take my last bits and pieces to continue invest. But honestly, I would not feel comfortable, and I always advise against it because I think the most important is to have an emergency fund set aside. Even before you start investing, have an emergency fund set aside. That's always what I say to anyone wanting to invest, unless you have 3 to 6 months, depending on how risky you are. If you have a big family, if you're by yourself, I think 3 months will be fine. 3 months of your monthly expenses. So that starts by knowing how much you spend on a normal month on yourself, all your rent, all your different expenses that you have in order to live in 1 month. Calculate it. And for that, of course, I recommend you to use my sheet, which you'll find down in the description below, my monthly budget and net worth tracker. And then you understand how much you spend every single month on average. And then take the number times 3. Again, in some cases it might be 6 times, but 6 might be a little bit too much for some people. But at least 3 months you want to have, because you never know what life throws at you, right? You might be fired and out of a job tomorrow, right? These things happen quite fast. Or you might have a big medical emergency. There's so many things that can happen, right? Life happens to all of us. So you want to make sure that you don't have to sell something or take a big loan and pay a huge interest payment on that. You want to have some liquid assets in the form of cash sitting in a high yielding savings account, right? And I made a lot of videos around this topic. I recommend apps like Lightyear, Trading 212, Revolut, Trade Republic, some great options out there where you can really, as I said, get 4 to 5% interest on your money. But in my case right now, with all these expenses, I'm getting closer and closer to 3 months. It's still a bit above the 3 months. At the same time, I like to have a bit more reserves on the side. I'm aiming for around 6 months because again, you never know what happens right now. Being out of the job, there's even more uncertainty. You never know, right? So for me right now, the priority is to reestablish my cash reserves and build it up. And only then I will continue investing. And at first I was really stressed about it. First of all, because I always preach it on the channel, the importance of continuous investing, no matter what and what have you. And second of all, of course, myself, right? I have my own targets, what I want to reach, how much I want to invest. I made my own projections by what age I'm going to be hitting what sort of net worth number. And if I take a break, I will, not get there so fast. But honestly, I'm here to tell you, it's okay to step aside and take a little break, right? Nothing will happen if you skip a month, 2 months, 3 months. The whole point of dollar cost averaging is to make it a habit and a routine. But ultimately, we're still living our lives, right? Investing should serve you, not the other way around, right? If you're so forced and have to live miserably in order to invest, I heard about people, eating only noodle soup because they wanted to have $200, $300, $400 a month to invest. That's, I think, the wrong way to go about it. Now, don't get me wrong. I'm all for paying yourself first. And that's what I always done in the past. As soon as I got my income, my salary, right now, my various other income streams, firstly, I invested and only the rest I spent on all my discretionary spending like food, rent, what have you. But first I paid myself in a way of investing. But right now, as I said, on a priority basis, I think it's more important to have a cash reserve set aside rather than taking all that money, the last bits and pieces that I have, and put it in the stock market, because who knows what will happen to the stock market? Yes, it's liquid, right? I could sell it right away. It's very liquid. I could sell it any day of the week, not on the weekend, but during the week, I could sell all my stocks and have the money and use it for whatever I want. That's great. But who is to say that we're not entering a bear market, which everyone has been talking about for so long, and we've seen corrections in the past, even for the S&P 500, the 500 biggest companies in the US, dropping by up to 30%. So in case you need the money now, but it dropped by 30%, you would really be losing out if you were forced to sell in that very moment. If you're not forced, it doesn't matter, right? It's just a paper loss, so to say. You just leave it there and it will bounce back and grow in the future. And that's what I'm trying to avoid. And that's why for me right now, it's more important to build up my cash reserves rather than forcing it, investing it, and really living very tight. I just don't like the feeling of it also. It reminds me of my university times when I really had to flip every coin around twice. Can you go for a nice dinner or not? And you're not sure if you can. It's not the situation I want to be in. Of course, there's certain parts in life where you have to be like that. So just take this message as a reminder. It's not the end of the world if you skip 1 month, 2 months, 3 months. But of course, don't slack off. Don't let this become a habit and a routine, right? Once your emergency fund is refilled, then go back to investing. Because if you slack it off for too long, then your 2-3 months become 1-2 years. And then that starts negatively compounding. And in investing, time can be your biggest friend or your worst enemy. The later you start on your investing journey down here, right? The earlier you start, time is all on your side. But if you only start over here, for example, investing, it will take you so much longer to get to the higher level. It will be another few years. The longer you're delaying the process of starting or even the pause can really work against you. So while it's okay to take a break once in a while, you don't want to let this become a routine. For me, to be honest, it's actually the first time since many years that I had this situation. But at the same time, I also hope it's going to be the last time because, yeah, as I said, right now, we're basically going to be paying rent in Dubai, finishing the apartment in Vilnius, and going to be paying for an Airbnb in Vilnius. So technically paying 3 rents at one time, plus a car, plus all the furniture expenses. So yeah, it's a lot of money that's being spent right now. It's a very expensive summer. But then from next year, once we travel back home to Lithuania, we're going to have our place there. So it's not going to be any rent anymore, just a small mortgage, but that's really reasonable to pay. And then obviously over here in Dubai, we're going to have our furniture, we're going to have the car. So a lot of expenses being taken care of. They're really front loaded right now, but later on, we can reap the benefits from it. So yeah, once again, long story short, don't beat yourself up if you miss a few months because life happens to all of us, right? That's totally fine. But make sure you get back into the routine. Same as going to the gym, right? Just because you skipped a few days, important to get back onto the treadmill, start working out and get the momentum. You want to have the momentum where you get into the habit and routine of investing every week, every month. I like every week because it just makes it more of a habit. Month is quite a long period, but once again, it has to work for you. If month is great, as soon as you get a salary, you start investing a certain amount. That's perfect. And even better if you automate it, so you don't even have to think yourself or remind it. You just automate it. There are great platforms out there. Made a few videos about this. That basically it's set it and forget it and investing on autopilot. So yeah, just an honest video about myself because I really pride myself in transparency and openness in this channel. And yeah, just sharing my struggles as well. Hopefully it was useful for you and helps you when you're feeling down that you can't invest a certain month. It's not the end of the world. Just make sure you pick yourself up, find a way out of it, build your emergency fund, and you'll get back into investing and growing your net worth over time. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.